My name is Brian Leni. I'm the editor of Junior Stock Group Premium. Today I'll be presenting Your Bias is Losing You Money. Presentation agenda. I'm going to go through 3 biases that I think every investor needs to be looking at right now to improve their success and consistency in the sector. I want to go into a deeper dive on sell price and how important selling is, company overviews with my 2 presenting companies, AbraSilver and Montage Gold, and an overview of my newsletter. So bias is indeed losing you money. It's losing us all money. How much money is the big question. And I think if you look at these 3 biases, I think you can improve yourself a lot. The first one, confirmation bias. We all have a tendency to go out into the market and look for confirming evidence, why we're right. It feels great. And the tendency to do that is how we can lose money, because we dismiss the naysayers or the negatives that might be associated with a market or a particular company that we like. And the fact is that, even if the naysayers are wrong, you need to understand how the market perceives that particular company that you're trying to invest in. Even from the company's perspective, the company should look at what the naysayers are saying about them and use that as part of their narrative of how they market the company to investors, because this is what they're going to have to overcome to see their share price appreciate, and that's what we all want. Number 2, over-influenced by social proof. And this is the herd mentality. Again, while we go to look for confirming evidence, we also like to follow the herd. When other people start making money, we get that fear of missing out feeling. It's all emotional based. And without taking a look at the company in depth or making a logical decision, we base our move or our buys and sells on that emotional feeling. And you really get yourself in trouble. You sell at the very lows when everybody's depressed and leaving the market, or you buy at those highs, when everybody is so excited and you want to jump in and join the action. And unfortunately, you're usually going to be wrong. The other side to it is, the herd mentality isn't necessarily always wrong. And again, this kind of ties in with the confirmation bias, where you do need to look at what the market or the herd is saying about a particular company or a market and see if they're right. It's a big part of your thesis, or should be a big part of your investment thesis, is taking a look at what the market is saying about that individual investment. Finally, the misweighing bias. And I think this is a really interesting one to talk about, because the misweighing bias is doing the right things but in the wrong order. If you want to maximize your success in the sector, you have to be doing things in a certain order, in my view. And I'm going to take a little bit closer look at misweighing bias. So right things, wrong order. And I've used Maslow's hierarchy of needs as a kind of comparison to what this means. So I used the example, you want to live a healthier life. Okay, and so I listed 4 things in order that I think you need to do if you want to live a healthier life. So you are what you eat and drink. You need a high quality of air that you breathe, good sleep and a good amount of sleep, and then followed by getting up and moving, exercise. Pretty basic stuff. So here's the point. The market, or however you want to look at it, markets you the easiest things it is to sell you. So a gym membership is something that can be sold quite easily, and people will jump on that bandwagon, but they don't change the way that they eat and what they drink, and this can be a big problem. Or I look back to my university days, and I was playing hockey with friends, and these guys are trying to improve their cardiovascular system, and they're still hacking darts in between games. This is not the way to improve the way that you or live a healthier life. So the point is just the order of things matter. So how does this apply to the resource sector? So if you look at my past presentations, I gave you 5 points on how I think you can be a better investor in the sector. These 5 points are actually in that sort of hierarchy of priority. And the first one is self-awareness. You cannot deploy money in the sector unless you know yourself, what your risk tolerance is, where you want to, your timeline for profit, where you want to go with your investment. So until you answer these questions, there's no way that you can use the price to value ratio in your favor. Some other things, again, it's kind of the same example. Buy an exploration company before you understand the risk that's involved with it. This is a big deal, and I think a lot of the general retail market, they make this mistake. They get wrapped up in the sexiness of an exploration company and lose sight of the fact that the vast majority of these companies end up nowhere, meaning you lose money. So 5 ways you can be more successful and consistent. And I want to take a closer look at sell price. So if you watched my January presentation in Vancouver, I talked about the price to value ratio and how important it was. And if the price part of the equation is dictated by the market. So that's the perception the market has on that company. Where the value side is the investor's responsibility. You have to go out there and value the potential company that you're going to invest in. And the value is calculated by the summation of the discounted cash flows over a period of time. And once you do that, you come up with a valuation of the company, then you're going to discount that by some percentage. Now, depending on where that company is in development, maybe it's pre-resource, maybe they just have a resource, maybe they have a technical study. Each of those points are going to come with a different confidence level, and therefore you apply a different discount to that value that you calculated. The other thing, this goes back to self-awareness. You have to understand what you know and what you don't know. And I would suggest putting a further discount on there if you are very new to it, or you're not confident in some of the operating costs or how you've set up that discounted cash flow model to give you a valuation. So once you do that, you got your value for the company, and hopefully it's selling, the company is selling for less than it's worth. And that differential is where you're going to make your profit. That value that you just calculated and discounted is now your sell price. And it is vitally important that when the company successfully completes those actions that get the market's recognition and get you to that sell price, that you actually sell. You can't fall in love with the companies, and if it hits the sell price and nothing else has changed, it's time to get out. The other side to that is you can move sell targets as you move along. Maybe they increase the resource. Maybe there's an increase in grade. Maybe there's a metallurgical recovery improvement. All of these things can kind of lead into having a higher NPV or a higher value in the company, and therefore you can move that sell price up. That's positive justification to move it up. The bottom line is selling at the right price is just as important as buying at the right price. So I use a case study, Montage Gold, one of the presenting companies. So the price, I use the fully diluted number of shares. The fact remains that the fully diluted number is the number you should be using in any of your calculations. This is the price or the shares that the prospective senior company would use if they were going to potentially buy the junior. So fully diluted issues, 170 million, share price 64 cents, had market cap around of 110 million. I'm going to use the value at $1,800 gold from their DFS, and an after-tax NPV of 5%, around $1 billion. For this example, I'm going to say that the confidence level is around 45% in that, considering it's a definitive feasibility study. And one other comment is on the discount rate. Considering the cost of capital these days is much higher than it was 2 years ago, I think that you probably want to use a base of 10% for any discount rate that you're going to use in the future. And again, these other discount rates can further give you a margin of safety if that's what you want. So we use the calculation. So $1 billion times 45% gives you 450 million. You divide that by 110, you get 4.1. You take that 4.1 and you multiply it by that share price, and that gives you a roundabout price target. Now, this is just a very basic look at how you can do an evaluation for any particular company. There's much more that go into it, in part being, why the company is selling at that discount, how realistic is it they reach that share price. There's a number of things that go into it, but it's to give you a basic idea. So company overviews, AbraSilver. It's led by John Miniotis, the CEO, and the VPX is David O'Connor. These guys have added a ton of value over the last 2 years, doing an excellent job at Diblilos. By the numbers, fully diluted shares, just over 600 million, share price of 32 cents, market cap around 190 million. Again, that's the fully diluted market cap. Cash, they just raised 10 million at the end of December, and they've got 18 million. They're very cashed up. So why is the company selling at a discount? And it's a great question that everybody should be asking. Well, one of the first things could be Argentina, and it's a very justifiable question or a point to look at risk. Argentina's been a basket case for the last 20 years, and quite honestly, I don't see it changing anytime soon. That said, I think if you are a miner in the right provinces and you're doing good work, the market will recognize the value in you. And you can see from Abra's chart, they've been much higher than what they're selling at right now. And then you look at success stories like Filo, which have really captured the attention and is located within Argentina. So if you're in the right provinces and you're doing good work and you're making discoveries, the market is going to recognize it at some point. The second point is market conditions. The last year has been terrible from a number of perspectives. But if you look at Abra Silver, they do have a high exposure to the silver price. And to some people, this is, I guess, good and bad, depending on your outlook for silver. But the silver price being as volatile as it has been, this little correction that we've seen, has seen Abra's share price come down, and maybe that's part of it. From another perspective, I don't see any mineral processing issues. It's a proposed open pit, oxide mineralization, which starts at surface. And what we're seeing from their new discovery, this stuff is very high grade. And again, located in Salta. So where's the value? Right now they have a PEA on their Diablos project, but in particular the Oculto deposit. At $16.50 and $24 silver, we got an after-tax NPV of around $470 million with a nice IRR around 30%. These are good numbers, and especially the initial capex for a project this size, $250 million, is a good price. So the market definitely sees this part of the project, but what they may not be putting into the valuation at this point is the discovery at the Southwest Jack Zone. The results they've had in this phase 3 drill program have been fantastic. 87 meters of 346, 58 meters of 209. This is all silver oxide mineralization basically at surface, and it's not included in the past technical study. So the addition of this, so what they'll do is they will come up with a resource this year and then incorporate this into the PFS, which has been moved back to Q4. And I think this is a big point for investors to consider, because I do not think that the market is taking this into account at this point. Number two, they had a discovery last year at La Copita. With the attention on copper discoveries or copper porphyry discoveries, I don't think Abra's getting any attention from the market for this discovery. 226 meters, about 0.4% copper equivalent. This is a significant discovery, and they're actually drilling there right now, a follow-up hole where they're targeting the porphyry center, which hopefully is going to be a bigger width, and around about that grade would be fantastic. And really what I see is this, this value is definitely hidden from the market, because there's a number of examples we can pick off of these juniors that had sold projects like this, and they're getting, $40, $50 million market caps just based off that. Montage, led by Tim Clark and Hugh Stewart. Tim Clark's Rick, sorry. Rick is new to me too. And he just came to the company last summer, and he was the CEO since its RTO. Rick was the CEO of Orca Gold, and really is part of this group that he was a part of too at one point with Orca. And they, of course, developed the Block 14 project, and they sold it to Perseus Mining, who has a 20% position now in Montage due to this purchase of Orca Gold. And that's kind of the connection. So Rick has come over, and he's taken over as CEO, and Hugh is gone to president and really the VPX of the company. By the numbers, fully diluted number of shares, 170 million. We went through this. So basically 110 million fully diluted, cash 8 million at the end of December. The strategic ownership portion of this, I think, is where this gets really interesting. So like I said, Perseus bought Orca Gold last year, and in the process, they gained this position, this very good position in Montage Gold. Perseus also has 2 operating mines within Côte d'Ivoire, which I think leads to, or could lead to, a number of different scenarios. The Lundin Group in that last financing increased their position, and Barrick and Endeavour, who participated in that financing, also did a deal to consolidate the North Claim blocks, which is a huge portion of land above Koné, but very strategic. So why does Montage sell at a discount to its underlying value? The gold market sentiment fell off a cliff in September of 2020, and this is when Montage had RTO'd. They RTO'd at $1.10 per share, and really never gained any traction, I think, because the market was on its way down. I became a buyer in the newsletter and myself at around 69 cents. And, we've seen a kind of some volatility, but they've added a ton of value over that last year. The other side, I would think, especially compared to some of the companies that do a lot of promotion, Montage has been pretty silent on how they presented to the market. And I think it's lack of promotion is part of the reason why their value isn't recognized at this point. And to me, this is exactly the type of unanswered question that you want to have in a company. Being silent is one of those things, because when you do bring the good work you've done to the market, I think it'll be easily recognized. The second is the West African discount. I think without a doubt, West Africa has some risk to it, but these guys have been working in Africa, 30 plus years. And I think, given whatever situation may or may not happen, these guys would know how to navigate it. Again, no mineral processing issues. It's a proposed open pit. Mineralization starts at surface. It's a low strip, and they got a nice high-grade core. And again, social license isn't an issue. So where's the value? So just looking at Kone, Kone has got high leverage to the gold price. If you look at the chart on the top right there, you can see how the project NPV increases with the gold price. And today, it's $1 billion project at $1,800 gold. And this is excellent. The part that I think is missed by the market, at least right now, is the fact that this consolidation of this north block of claims, which you can see in the bottom right, is significant, because if they can outline, and again, this is my calculation, but if they can add, let's say, 500,000 ounces at 2+ grams per ton gold, the satellite deposits within, let's say, a 50-kilometer radius of Kone, it can make a huge difference in the overall NPV used as a starter pit for the Kone deposit as it is. So it has a ton of potential to add to the project, let alone if they go much higher than that 500,000 ounces that I'm talking about. So they're drilling there right now, and we've had a first bunch of results put out just prior to or the end of January, and they look really promising. So I think there's a lot of potential there. Finally, Junior Stock Review Premium. I publish the newsletter weekly. The newsletter is a focus, or it's based off my personal portfolio and what I'm doing with it. Research, market commentary, portfolio review videos, and I answer all of my readers' questions. Some of the big winners over the last 2 years. If you guys have any questions, you can, of course, pull me aside anytime, or email me at juniorstockreview@gmail.com. Thank you very much.